Investment. Dollar cost averaging. Invest in cryptocurrencies on a shoestring. One of the most difficult choices you'll have to make when investing in cryptocurrency for the first time is when to invest. Fortunately, dollar cost averaging takes all the guesswork out of trading, making it the perfect approach for new traders. There is always the concern that after making an initial investment, the market will decline and you will lose money, whether you want to spend $100 or $100,000. On the other side, the thought of missing a surge is as dreadful, which frequently leads to investors being overeager to invest. However, there is a third approach that fits well in the middle of the two possibilities. How does dollar cost averaging work? Investments are made using the dollar cost averaging method. You divide your initial investment into many tranches and trade at a predetermined time each period rather than investing all at once and attempting to time the market to your benefit. For instance, a person with $100,000 to invest might opt to spend $25,000 every 3 months for 4 months, spend $8,333 every month for a year. For 26 weeks, spend $3,846 each 2 weeks. For 52 weeks, put down $1,923 each week. The theory behind this strategy is that by spreading out your purchases over time rather than all at once, you'll be more likely to average out a better return. When placing DCA trades, most people have a tendency to adhere to strict schedules and designated times. For instance, Bob may opt to divide his $10,000 into 100 tranches of $100 each, with each tranche being used to buy Bitcoin every Monday at precisely 12 at. Independent of the current price of the Bitcoin market at that time, he believes that by spreading out his $10,000 investment, he will accumulate more Bitcoin than if he had invested it all in one transaction. Platforms that offer automatic cost averaging in dollars. Current trading platforms and investment tools like Coinbase, 3 and CryptoHopper are designed to make dollar cost averaging easier. The user will either manually set up the scheduled contributions after depositing an initial sum, or they will manually link their bank account to their investing account. With the exception of initial setup, the investments can be automated by the investment platforms, meaning that the investor has very little work to do. Unlike an emotional perspective, using automatic investment tools like dollar cost averaging reduces the pressure of trying to time the market, which frequently creates problems for new crypto traders. We may examine the results of making tiny investments in Bitcoin over 10, 5, and 1 years to show the effectiveness of a straightforward DCA method. Using information from www.dcabtc.com. We will suppose that an investor has been putting $1 each week into Bitcoin every Monday at 12 UTC. 10 years. Principal investment $520. Total amount $371. Percentage change 71,252%. 5 years. Principal investment $260. Total amount $2,015. Percentage change 675%. 1 year. Principal investment $52. Total amount $62. Percentage change $19.20%. It's difficult to resist wishing for a time machine when you see these figures in order to return to the early days of Bitcoin. But the point is that over time, even a seemingly insignificant sum of money can grow significantly. $52 invested yearly for 5 years yields over $2,000. The total rises even further if you can work at least $52 a week. Averaging costs in 401 seconds. Millions of people have used the dollar cost averaging strategy in their 401 accounts. According to Fidelity Investments, 401 account balances reached a record high in 2021. Due to the special regulations that apply to 401 accounts, practically everyone who uses one as a vehicle for investing employs a DCA strategy. Whenever an investment utilizes DCA as their wealth building method, the accounts begin by gradually building up. But after enough time has passed, there are sizable assets in the account. Any investor who isn't trying to time the market will find dollar cost averaging appealing. It lessens volatility, does away with the requirement for self-control, and appeals particularly to investors with little money available for an initial investment. I am currently investing in Bitcoin myself and taking advantage of the cost average effect. I use the Nuri Bank for this purpose. Nuri is the app you use to manage, save and invest your money. Nuri makes your entry into the world of investing very easy. I buy cryptocurrencies like Bitcoin and Ethereum regularly and in smaller tranches. If you use my referral link, you and me will get €30 for free with your first Bitcoin purchase of €30. Please have a look under my video description for my referral link. Don't forget to hit the notification bell and to hit the subscribe button for more videos like this. Thanks for watching, and please take in mind, do not take anything as a financial advice and do always your own research.